Namaste investors. Welcome back to my channel Finance Sikho India. October 24th was a busy day for quarterly results with several major companies announcing their Q2 FY26 earnings. Today we'll break down the key highlights from Dr. Reddy's Laboratories, Coforge, SBI Life Insurance, ITC Hotels and SBI Cards. And most importantly, whether they beat or missed analyst estimates. Let's dive right in. Starting with pharma giant Dr. Reddy's Laboratories, the company reported consolidated revenue of 8,805 crore rupees, up 9.8% year-on-year and 3% quarter-on-quarter. Net profit came in at 1,437 crore rupees, marking a strong 14% year-on-year growth. However, the results missed analyst estimates. Bloomberg consensus expected net profit of 1,397 crore rupees, while ET Now poll had estimated 1,410 crore rupees. So, the company actually beat Bloomberg estimates marginally but missed the ET Now consensus. Revenue of 8,805 crore rupees was ahead of the estimated 8,637 to 8,706 crore, beating expectations on the top line. EBITDA stood at 2,351 crore with a margin of 26.7%. Though this was below the estimated 2,238 crore rupees by some brokerages. The underlying EBITDA margin, after adjusting for one-off provisions, was even better at 27.5%. Now, let's look at the segment-wise performance. Europe was the star performer with revenue of 1,376 crore rupees, up a massive 138% year-on-year. India business grew 13% to 1,578 crore rupees and emerging markets rose 14% to 1,655 crore rupees. However, North America remained under pressure, declining 13% to 3,241 crore due to ongoing weakness in Revlimid and pricing challenges in the US generics market. Next up is Coforge. And what a stellar quarter this IT services company had. Coforge delivered record-breaking performance with revenue of 3,986 crore rupees, up 31.7% year-on-year and 8.1% quarter-on-quarter. The company beat analyst estimates comfortably. Revenue came in line with consensus estimates of 4,033 crore rupees, while net profit of 376 crore rupees beat the average analyst expectation of 371 crore rupees. Some brokerages had expected profit growth of around 51.8%, and the company exceeded that with an 86% surge. The EBIT margin expanded significantly to 14%, up 251 basis points quarter-on-quarter, and 240 basis points year-on-year. This was a major beat as analysts were expecting around 14% margin for fiscal year 26. The company signed 5 large deals during the quarter with total order intake of $514 million. The next 12-month executable order book stood at $1.63 billion, up 26.7% year-on-year. Employee metrics were also impressive. Coforge added 709 employees during the quarter, taking total headcount to 34,896. Attrition remained at one of the lowest in the industry at just 11.4%. The board declared an interim dividend of 4 rupees per share with a record date of October 31st. Moving to SBI Life Insurance. The company reported mixed results for Q2 fiscal year 2026. Net premium income jumped 22.6% year-on-year to 24,848 crore rupees. However, the bottom line disappointed. Net profit declined 6.6% year-on-year to 495 crore rupees due to investment income losses of 2,055 crore rupees caused by market volatility during the quarter. The profit fall was attributed to higher operating expenses and commissions paid to boost sales amid intensifying competition. On the positive side, the company showed strong operational metrics. Value of new business grew 14% to 2,750 crore rupees in the first half, with VONB margin expanding to 27.8% from 26.8% last year. Annualized premium equivalent stood at 9,920 crore rupees with 10% growth. The company maintained strong market leadership in individual new business premium with 25.4% market share. The solvency ratio stood at a healthy 1.94, above the regulatory minimum, and 13th month persistency improved by 70 basis points to 85.37%. Assets under management grew 10% to 4.8 trillion rupees. ITC Hotels reported exceptional performance in Q2. Consolidated net profit jumped 74% year-on-year to 133 crore rupees. The company appears to have met or slightly beaten expectations, though detailed analyst consensus was not widely available. The strong 74% profit growth and 8% revenue growth were well received by the market. Revenue from operations increased 8% year-on-year to 839 crore rupees. The hotels business segment generated revenue of 823 crore rupees, up nearly 8% year-on-year. Profit before tax surged 66% to 189 crore rupees. Total expenses rose modestly by 4.2% to 700 crore rupees, showing excellent cost management.
Finally, SBI Cards and Payment Services. The company reported net profit of 445 crore rupees, up 10.15% year-on-year, though it fell 20% sequentially. The results were mixed versus estimates. While specific consensus numbers weren't clear, analysts had expected healthy NII growth and NIM expansion, which the company delivered. However, the 10% profit growth may have been slightly below some expectations, given the strong operational metrics. Total revenue increased 13% year-on-year to 5,136 crore rupees. Interest income grew 9% to 2,490 crore rupees, while fees and commission income jumped 16% to 2,471 crore rupees. Overall spending surged 31% year-on-year to 2,490 crore rupees, 1.07 lakh crore rupees. This was driven by retail spending up 17% to 89,611 crore rupees, and corporate spending surging 218% to 17,452 crore rupees. Net interest margin expanded, benefiting from lower cost of funds following RBI rate cuts. However, credit costs remained elevated at 9.6%, which weighed on profitability. Finance costs declined 4% to 760 crore rupees due to lower borrowing costs. However, operating expenses rose 24% to 2,484 crore rupees, driven by campaign costs and higher cashback on corporate spend. Cards in force grew 10% year-on-year to 2.15 crore, with new account additions of 936,000 during the quarter. Gross NPA improved to 2.85% from 3.27% a year ago. So that's the Q2 FY26 earnings roundup for October 24th. To summarize the estimate performance, Coforge was the clear winner,
beat estimates on both revenue and profit with exceptional margin expansion. Dr. Reddy's delivered mixed results, beat revenue estimates, but profit was around consensus levels. SBI Life disappointed with a profit decline due to investment losses and higher costs. ITC Hotels exceeded expectations with strong 74% profit growth. SBI Cards showed steady growth, but elevated credit costs remain a concern. If you found this analysis helpful, please hit the like button and subscribe to the channel for more earnings coverage. Drop your thoughts in the comments below. Which stock looks most interesting to you? Until next time, happy investing.